Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh, and Sneha will be joining us shortly. And over the next 1 hour, we'll be taking you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar as well, and tell you what the brokerage is also saying this morning. But first things first, let's take a look at what Wall Street really did. Of course, futures not doing all that much at this point, and these moves, of course, come after the S&P 500 as well as the 30 stock Dow closed lower on Thursday, and that's the kind of move that we largely saw. Now, investors' fears of the economy, of course, returned after August private payrolls grew by 99,000 as well, the smallest gain since 2021 coming in there as well. All eyes are now on August's non-farm payrolls report, which is also expected to guide us about the Federal Reserve's approach towards interest rates as well. So that's an important update that we're keeping on our radar as well. And the three major US indexes are down as the short-term trading week also comes to a close. So when you take a look at the broad market index as well as the Nasdaq are so far lower by 2.6% as well as 3.3% respectively. Those are largely the kind of moves that you've seen on a weekly basis coming in there as well. 30 stock Dow as well, downtick of about 1.9% coming in this week as well when you take a look at Dow as well. So that largely is the handover coming in. As far as US markets are concerned, let's also take a quick look at oil and see what that is up to. And US crude oil pulled back slightly, closing near that $69 per barrel mark as OPEC Plus delays plans to boost production after futures sold off steeply this week as well. Now, OPEC Plus members, of course, have delayed plans to increase oil production by 180,000 barrels per day, citing recent price slumps. And the scheduled hike, initially set for October, will now start in December with the 2.2 million barrel per day output cut extension lasting until November 2025 as well. The move also aims to stabilize crude prices with Brent crude trading near $73 per barrel as well. So that largely is the handover coming in as far as crude is concerned. In fact, we also caught up with Geoff Dennis, who's an independent emerging markets commentator, as well as Anurag Singh, Ansad Capital as well, on their expectation on where they see crude headed as well from here. Listen into what they had to say there.
I suspect the range for Brent is going to be something like 70 to 80 or 85 in the next, say, 2 to 3 months. One or two things you can't turn around in terms of pressures to the downside on prices. One is the Chinese economy is struggling and is struggling very much, and there's no obvious reason why that growth rate is going to turn upwards in the near term. And also, although obviously the U.S. economy is in reasonable shape and ought to avoid recession, at least as far as I'm concerned, I think the chances of an acceleration of growth in the U.S. is relatively limited. So I don't see a big surge in prices here. But I think, as I say, I think prices got oversold, and when you get oversold like that, you get an output adjustment from one of the key suppliers, and that's the OPEC Plus group.
I think we'll have to just wait for US elections to be behind us to actually know what is the normal level of oil. Before that, everything else is kind of focused towards keeping the oil prices low. And I don't think that's the normal balance of crude oil. My sense is the prices should be around in the range of 70 to 80 and should never be below 70. But we'll find out once the elections are over in November.
Alright, then let's get a move on, and let's also take a look at all the important events to watch out for in today's trading session. First up, back home, you also have a lot to watch out for today because you have the Forex reserves data coming out. It's going to be an important metric to watch out for, so keep a close eye on this. Now, globally, from the US, you have non-farm payrolls, Fed's balance sheet, as well as Baker Hughes oil rig count. Now, Baker Hughes oil rig count specifically is going to be very important to watch out for on the back of everything that we've been seeing happening with crude, WTI, and Brent as well. And from Eurozone today, you have the GDP number coming out, so keep a very close eye on what that number ends up being. Shifting focus back home, when you talk about corporate action, today on the AGM front, you have the Godfrey Phillips AGM happening, and we interacted with the management a few days ago, and well, they gave us an indication to keep a close eye on this AGM. Lots of announcements expected today, so keep a close eye on these developments as well as this counter today. Along with that, MTAR Tech and Petronet LNG will also be holding their AGMs today. Now, you also have a host of stocks that will be trading ex-dividend today, the likes of GNFC, GSPL, NBCC, New India Assurance, Protean, Quest Corp, Shipping Corporation, as well as Triveni Turbine. Now, in terms of some other events, first back home, you have Amit Shah, who's likely to unveil the BJP manifesto for the Jammu and Kashmir polls today, so watch out for that. Also, shifting focus to Varanasi, the Varanasi court will be hearing the Gyanvapi ASI survey today, so also watch out for what that court rules today. But internationally today, lots of comments expected coming in from the Fed. You have New York Fed President John Williams, who is all set to speak today. Along with him, Fed Reserve Governor Christopher Waller will also be speaking. Lots of important commentary expected today in terms of the soft landing that we're seeing in US, what the Fed officials have to say of that, as well as their rate cut trajectory and the plans going ahead. So lots to watch out for. Keep a close eye on all of these cues.
Well, absolutely. Definitely keeping an eye on all of these cues that Snehi mentioned. But moving on, then the number of people claiming unemployment benefits in the US dropped to 227,000, below market expectations and at a 7-week low. But all eyes today will be on the all-important jobs report for the month gone by. Wall Street is predicting 161,000 new jobs and a 4.2% unemployment rate. But recent data also hints at a hiring slowdown as well. If the numbers disappoint, there could be a possibility of a big interest rate cut coming in from the Fed as well. And the labour market's cooling faster than expected, and the Fed's response will also set the tone for the economy.
Okay, moving on then, JP Morgan's top economist Michael Feroli is urging the Fed to cut interest rates by 0.5 point this month, citing weak private payrolls growth and rising unemployment. Traders see a 39% chance of a 0.5 point cut, with Feroli arguing that the Fed should hurry its pace to rate cuts to reach the neutral policy. The Fed's next move will be crucial, with Feroli warning that waiting too long could risk both employment as well as inflation.
And a groundbreaking moment for AI then. In terms of AI history, the US, Britain and EU are signing the first ever international AI treaty, adopted in May after discussions between 57 countries. This treaty, also known as AI Convention, focuses on safeguarding human rights affected by AI systems.
And well, the US government has warned against the merger of Nippon Steel and US Steel. It believes consumers and businesses may face steel shortages and price increases if the $15 billion takeover is approved. A special committee has cited concerns over increased reliance on cheap Chinese steel. They also note that Nippon Steel's ownership could influence US Steel's decision on trade cases, prioritizing commercial interests over national security.
Alright, while keeping it going with updates from the US, then Donald Trump has announced plans to establish a government efficiency commission to be led by Elon Musk if he wins the presidential election. The commission aims to eliminate fraud as well as improper payments within 6 months. Musk has expressed interest in serving on the commission without pay, title or recognition.
Okay, moving away from that, Salesforce is acquiring startup OWN for $1.9 billion in cash, expanding its cloud backup capabilities. OWN supports backups for Microsoft Dynamics, Salesforce and ServiceNow. This marks Salesforce's return to large acquisitions following a brief pause after activist investor scrutiny.
Alright, on to Motown then. Volvo Cars has cut its margin and revenue targets due to global trade complexities and tariffs. The Swedish automaker has also abandoned its 2030 target of 100% electric vehicle sales, now aiming for 90 to 100%. Volvo also cited consumer demand, charging infrastructure and government incentives as reasons for the change.
Alright, let's shift focus back home, and Indian e-commerce exports are on a high. Talking exclusively to ET Now, Amazon India Director Bhupen Wakankar says he expects the company to clock $13 billion in e-commerce exports by 2024 end. But where are these exports coming from, and which are the geographies that are giving a push to exports from India? Let's go across and listen in.
We are happy to report that by 2024, we would have done $13 billion of that. Just to put that in perspective, the last year when we spoke, that number was $8 billion. So that's sort of the trajectory that we are talking about, right? And these are all e-commerce exports coming from small MSME firms from all parts of the country. Over 200 cities are now represented on Amazon Global Selling. And it's driven largely by new sellers as well as existing sellers becoming more successful. So now we have over 1.5 lakh sellers who have used the platform over the last 9 years, up from 1.25 lakhs just a year ago. So that's a $25,000 seller base increase in a relatively short period of time.
Yeah, and where are these where is this export demand really coming from? Like, which are the geographies where you're seeing, the Indian government's motive was to sort of expand into newer territories, to expand the country's exports. Are you also, tapping into newer geographies, or is it, repeat sort of orders coming in?
So what the global selling platform enables is just access to 200 countries the world over, right? And I think it's a function of how sellers want to prioritize marketplaces and so on. And typically what we have seen is our exports follow the global GDP pattern. So US is of course the largest marketplace, largest economy in the world, so the largest marketplace that our sellers serve, right? And UK and Japan. But then of course we are starting to see a lot of conversation on ties that India traditionally has had with, let's say, a UAE or an Australia. And some of that our sellers are starting to embrace. So we're starting to see that while these may not be proportionally large economies in the same spirit as the US or the UK, but we are seeing a lot of seller interest in these marketplaces as well.
And which are the categories that are doing well for you in terms of exports and, of course, domestic consumption?
I think exports traditionally, home textiles has been a big strength for India, and that continues to be sort of a big growth area for us. But we are starting to see a lot of new categories getting a lot more traction, growing faster than home textiles. And I think sort of healthcare and well-being products, where they think ashwagandhas or the turmerics of the world or medicinal honey, that type of stuff. Or think STEM toys, which is sort of electronic toys or, educational toys for children of all ages. And these are all categories that are starting to emerge in a very big way.
All right, well, with that, we slip into a very short break. But when we come back, we'll take a look at how the Asian markets are faring. So don't go anywhere.
Hi there, welcome back. Still watching Market Cafe. Let's take a look at how the Asian markets have opened up this morning and looking largely mixed if you take a look across these indices. First up, let's start talking about Nikkei, because Japan's household spending data for July rose 0.1% in real terms from the previous year compared to a 1.2% rise expected from economists polled by Reuters. So that's a big gap coming in between expectation and reality. Also a reversal compared to a 1.4% fall in June. Data from country's statistics Bureau said that the average household monthly expenditure for July 2024 was up 3.3% in nominal terms from the previous year. Now, Nikkei started the day marginally below the flat line. As of now, also continues to be there. In fact, absolutely flat, but trying its best to inch towards the green. Let's move on. Talk about South Korea's Kospi. That was 0.8% lower. Continues to actually build on those losses. Almost 1% lower is where Kospi is. On the flip side, Australia's ASX 200 climbed 0.1% on open and building to those gains 0.2%, a mere 18-point uptick coming in on ASX 200 as of now. And if you take a look at what Hang Seng and Shanghai are also up to, you have Hang Seng on your screen also not doing much, very flat with a very mild negative bias is where Hang Seng is. Shanghai, however, on the flip side, 0.3% gain coming in, an 8-point uptick on that index. So largely flat and largely mixed, but not much action happening in the Asian markets this morning. But if you shift focus and take a look at where we shut shop yesterday, 25,145 is where we closed Nifty for the day, implied at 25,166 thereabouts. So on the spot basis, in fact, a merely 20-point uptick is what is indicated, not much. It's seeming to be a flattish start for us today as well. A subdued trading day is what is indicated. So let's just take a seat back and take a look at how that pans out for us.
Well, absolutely, and we'll see how that pans out for us. But with that, let's also slip into news for the hearing impaired then. Welcome back. Thank you so much for staying tuned in. Well, let's get to some important commentary then. And while addressing the CEO's roundtable meeting at Singapore, PM Modi asked businesses to consider entering India's booming EV sector. In fact, he also spoke of the opportunities in the semiconductor industry. Listen in to what else he had to say.
हम देश में दूसरे प्रकार से भी एनवायरनमेंट को एड्रेस करना है, जैसे हमारी स्क्रैपिंग पॉलिसी। ये इतनी बड़ी अपॉर्चुनिटी है। मैं सरकार के सारे पुराने व्हीकल स्क्रैप करने की दिशा में जा रहा हूं। इतने बड़े देश में सारे पुराने व्हीकल स्क्रैप होना है, इतना बड़ा काम है। अगर आपकी कंपनियां मान लीजिए इन्वेस्टमेंट करें या खुद इस दिशा में आए, और उसके कारण इलेक्ट्रिक व्हीकल का बहुत बड़ा नया मार्केट बनेगा। तो स्क्रैपिंग का एक ऐसा बड़ा क्षेत्र है, अगर आप वहां की कंपनियों को फाइनेंस की मदद कर सकते हैं और थोड़ा शुरू में, क्योंकि एक प्रकार से ग्लोबल गुड के लिए है, ये एनवायरनमेंट की दृष्टि से बहुत बड़ा काम है, तो आपके लिए एक बहुत बड़ा अवसर के रूप में। आप जानते हैं, मैं पहले भी कह चुका हूं, रिफॉर्म के क्षेत्र में मेरी सरकार बहुत प्रतिबद्ध है, और हम रिफॉर्म हमारे देश की आवश्यकता, हमारे देश के भविष्य को ध्यान में रख के कर रहे हैं, लेकिन हम ग्लोबल स्टैंडर्ड को मीट करने वाले रिफॉर्म्स भी कर रहे हैं। हम बहुत एग्रेसिवली सेमीकंडक्टर के क्षेत्र में जा रहे हैं। अब तक करीब 5 कंपनियां ऑलरेडी अपना काम शुरू कर चुकी हैं, आगे भी औरों की संभावनाएं हैं, और हम पूरी इकोसिस्टम को लाने वाले। हमको एक छोटा सा टुकड़ा, एक आध हिस्सा करके अटकने वाले नहीं है। भारत के पास टैलेंट है, सब बड़ी कंपनियों के रिसर्च यूनिट वहीं पर है। अब हम चाहते हैं कि हम खुद ही यहाँ पर उस दिशा में आगे बढ़े।
Okay, that's the word coming in from the Prime Minister speaking in Singapore. But speaking at an event, Finance Minister Nirmala Sitharaman touched upon India's policy stability and the GDP growth potential. Here's an excerpt of what she said.
We need to have, at a time or at the juncture in which India is located in, stability in policy, a predictable tax regime, and also continuity in administration, so that businesses can be sure that there will be some steady pathway with which they can go ahead with their plans. India is at a cusp of moving towards and taking that trajectory which will lead us to a developed economy by 2047. And if in this trajectory you have obstructions, you're not going to be able to make it even in the next 30 years. So what if we don't make it? Look at what you're doing at the moment. You are the fastest growing country. You contribute, as per IMF's own assessment, close to 16% of the global GDP. And if that is the contribution you're making to the global GDP at a time when even advanced economies are struggling, I know they start from a higher base. Here is India touching 7, and even a few days ago, the World Bank reiterated that in coming year too, India shall grow at that level, 7%. And that is purely because stable policy making, steady and visionary leadership, together with the efforts of all the entrepreneurs in this country.
All right, well, that was the word coming in from the Finance Minister. Moving on to some other important commentary then, amid rising onion prices, the government has also started retailing the vegetable at concessional rates via mobile vans as well. Onions are priced at 35 rupees per kg, half the average retail pricing. That is, my colleague Sameer Dikshit also talked to the Union Consumers Affairs Minister Prahlad Joshi as well about this. Listen in to what he had to say then.
Onion price is around 65 to 70 rupees. We are selling it at the rate of 35 rupees. At present, in what I have launched, that is in Mumbai and Delhi. And in next phase, we will launch in some more cities. And in the third phase, that is in the third week of September, we'll launch in the entire country. And by that time, I am very confident as the Consumer Affairs Minister, the prices will come down. And there may be little price hike issue at that time. But immediately in the October end and November, Kharif stock will start coming. For that, we have nearly about 4.7 lakh tons of the stock. That is sufficient.
Apart from onion, there are other vegetables or maybe other commodities, pulses and all. Is government also looking, the ministry also looking to intervene in those areas as well? What is the plan?
Now, as it is, very shortly, in a small way, we will go for the Bharat Chana also. Okay. That is the one. But overall, we should understand the overall situation also. As far as pulses is concerned, one is India, its production is very, very less. And now Prime Minister has given a call, and we have told NCCF and other agencies to promote and also procure the entire stock, to have an agreement with them. All those things are going on. We are trying to increase the overall production.
Okay, shifting focus in a bit to empower policyholders, the IRDAI has come up with a master circular to make the settlement process more efficient and enhance service standards. My colleague Anurag Shah is here with more details.
For policyholder empowerment, and policyholder can get a claim in a hassle-free way, IRDA has a consolidated 30 different circular into one master circular. So the fine prints of the master circular, which mentions about the mandatory customer information sheet for all insurance policies, which will have all the details regarding insurance policy. 30-day free look period for life and health insurance. In the 30-day period, if policyholder is not satisfied with the policy, they can get their refund. No proposal deposit is required at the proposal stage. So after the commencement of risk only, policyholder is supposed to pay the premium. Other than that, mandatory nominee and bank account details for the faster claim settlement. So it will be a mandatory for a policyholder to give bank account details going ahead. Policy document will be available in the regional language also if asked by the customer. And linking of insurance policy with a DigiLocker also been mandated in the new master circular. So for the empowerment of insurance policy holders, IRDA has come up with the fine prints in the master circular.
All right, thanks Anurag for all of those important details. Moving on to Motown, then Mercedes-Benz India yesterday launched its flagship electric offering in the ultra-luxury segment, the Maybach EQ7 680 SUV priced at 2.25 crore rupees. Now, 18 Sumit Chaturvedi caught up with Santosh Iyer, Managing Director as well as CEO at Mercedes-Benz India. Listen into what he had to say then.
Maybach by itself, we have a huge responsibility, and we also say how to make the best even better. So when it came to electrification of Maybach, it starts from the heart of the car, and that's the good coming up from the battery. It has a 122 kilowatt battery which can deliver 492 kilowatts of power, and also a range of 611 kilometers. But even if you see real world range, it should be in the excess of 550 kilometers. So I think the heart of the car itself, when you talk about electrification, the battery, the range, the life is critical. What's beautiful is actually when you see the car, beauty lies in the eyes of the beholder. But in this, I am sure it's a consensus that it's a beautiful car, well designed in terms of proportion, very practical also in terms of ground clearance and many other features that we have also put into the car. So the good and the beautiful both compete when it comes to the Maybach, electric Maybach.
Santosh, you also made a very valid point today. Transition to BEV or battery electric vehicle is a marathon, it's not a sprint. This combined with government saying, you were there day before yesterday, they were not going to cut down taxes. How do you see this transition happening in the whole industry? Because your customer can afford these cars, but on the lower side, they need tax breaks and all. What is your position as far as the taxation environment on EV is concerned?
So I think, there are two levels of taxes in cars. One is the central taxes, which is the GST, and combustion engine cars have 48%, whereas EVs have only 5%. I think day before yesterday, Mr. Amitabh Kant was there in our event. We had a sustainability dialogue in Delhi, and he clearly mentioned that we are going to keep this gap. And I think that's so important, because then the transition to electric would happen faster, because then the price, you see this car, we have launched at 2.25 crores. We have passed the entire tax advantage to customer, because if it was not the case, this car would be costing 3 crores. The combustion engine counterpart is 3.5 crores of this car. So it's important that this advantages remain till the time India achieves 25-30% of EV penetration.
Okay, on that note, we'll slip into a very short break on this edition of Market Cafe. More stock-specific news and updates when we return. Good to have you back on Market Cafe. Let's talk about the telecom sector because telecom stocks, the likes of Vodafone Idea, Indus Towers and Bharti Airtel will be in focus today as Goldman Sachs has come up with a report. The brokerage has a sell call on Vodafone Idea, Indus Towers and a buy on Bharti Airtel. My colleague Somit is joining us with all the details. Somit, good morning.
Well, Goldman Sachs has come out with this big note on the telecom sector on all the three companies, that is Vodafone Idea, Indus Towers and Bharti Airtel. It's a buy on Bharti Airtel, while Vodafone Idea and Indus Towers continue to remain a sell. Speaking on Vodafone Idea, it's a sell rating, but the target price is around 2.5 rupees. Now, the target price does suggest a downside of more than 80%, but do remember that the analyst was always bearish and had a sell rating on Vodafone Idea. In fact, they have slightly increased their target price to 2.5 from earlier target price of 2.2. Now, they are saying that the path to free cash flow break even and market share recovery is still some time away for Vodafone Idea. They're expecting another 300 basis points of market share loss over the next 3 to 4 years for Vodafone Idea. However, they also have a blue sky scenario here where they're saying that if 65% of the AGR dues are waived off, there is a consistent tariff increase, and in near term they do not have any government repayments, and the target price on Vodafone Idea would stand at close to 19 rupees per share. For Indus Towers, they are saying that there is a big disconnect between the fundamentals and the valuations of the company. The big re-rating that we had seen in Indus Towers share prices so far is done as per the brokerage, and they are saying that there is a limited visibility over the long-term growth outlook for Indus Towers going forward, and they would incrementally get constructive on Indus Towers only if Vodafone Idea is able to repair its balance sheet. And lastly, when it comes to Airtel, they are expecting strong growth with inflecting free cash flow to continue for the company. They have hiked the target price to 1700 rupees from 900 rupees, and they are expecting the India mobile business revenue and EBITDA to grow at a CAGR of nearly 16% and 21% over FY24 and 27. And lastly, they are expecting Bharti Airtel to be net debt zero by FY28. So that's Goldman Sachs report on telecom sector.
Well, absolutely. Thanks, Amit, for that update coming in. So all three stocks, Vodafone Idea, Bharti Airtel as well as Indus Towers, will remain in focus. But which are the other counters that you should keep on your radar bright and early this morning? Ria is standing by with that snapshot. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have Bharat Forge. Now, the August preliminary North America Class 8 net orders came in at 16,400 units, which was up 22% sequentially, but down 16% on a year-on-year basis. Now, according to ACT Research, historically, August is the last month of weak orders before the OEMs open their books to next year's orders. So definitely keeping an eye out on Bharat Forge. We also have a stake sale coming in for Pidilite Industries. Now, the promoter has sold 3.61 lakh shares over September 2nd to September 4th, and further on Pidilite Coltech Group, which is a leading name in India's industrial adhesives and sealants market, has signed an exclusive distribution agreement with Pidilite Industries. Let's shift focus though to KEC International. Now, the company has won new T&D orders worth rupees 1,423 crores for the design, supply and installation of 380 kilovolt transmission lines in Saudi Arabia. Now, this is coming in as a consecutive order win in the Middle East, and with these orders, the year-to-date order intake for the company now stands at rupees 11,300 crores, which is a growth of over 75% over the previous year. Lastly, we also have Ashoka Buildcon in focus. Viva Highways Limited, which is a wholly owned subsidiary of the company, has monetized its land in Pune for rupees 453 crores. So these are the stocks that we are keeping an eye out on today.
Thank you so much for taking us. We're going to be keeping a close eye on all of these stocks in today's trade, but let's also take a look at what brokerages are flagging off for us this morning and what stocks are on their radar. First up, we have a Goldman Sachs note coming in on Aavas Financiers, where they've upgraded the stock to a buy rating from a neutral, also gone ahead and hiked the target price to 2,160 rupees from 1,584 earlier. They say that there is a better AUM growth due to multiple growth drivers. They're also expecting operating leverage to kick in and credit costs to be under control. on the back of good asset quality. They're also saying that valuation re-rating led by better earnings growth visibility is something that is possible for this stock going ahead, which is why Aavas Finances will be in focus today on the back of this upgrade as well as a price hike, target hike coming in from Goldman Sachs. But let's also shift focus, talk about a Morgan Stanley note coming in on the entire auto space, and they're saying that the August Class 8 orders were weak and seasonally versus history, but less compared to July. August orders were still weak, but some signs of life is being seen. The September-October period historically represents the most important order period during the year. This is what they're flagging off for the entire auto space.
Well, absolutely, Snehi, but there's a lot on brokerage radar this morning. So when you take a look at UBS and what they've said about OMCs, they're talking about how integrated margins are something that they see going strong, and they're remaining positive on the likes of IOCL as well as BPCL this morning. In fact, they're also talking about how the spot integrated margins are elevated at 16.2 rupees to 17 rupees per litre. And they're also saying that this has also brought back the debate on possible fuel price cuts. In fact, they also think that OMCs will be taking a longer view and are unlikely to materially change retail fuel prices as well. So that is the kind of view that they have as far as IOCL as well as BPCL are concerned. But let's also take a look at Citi's India strategy then, and FII inflows have been net negative, and that is something that Citi is talking about. In most cases, they've seen negative FII inflows in the immediate 1 month as well as 3 months following the commencement of a US rate cut cycle, and that is something that they're highlighting. Now, talking about sectors, they're talking about how the healthcare as well as staples space did well over 12 months from the previous rate cut cycles as well, and they're removing industrials as well as utilities from sectoral preferences and stock lists post analyst departure as well. So in terms of stock specific verdicts, then they're talking about, they have an they're adding HUL to their India preferred list. So that's an addition coming in right there. When you take a look at Bharti Hexacom as well, they're also adding Bharti Hexacom to mid-cap picks as well. And when you take a look at their key overweights as well as underweights, in terms of key overweights, they do have banks as well as insurance, even telecom as well as healthcare coming in terms of overweights there. But when you take a look at underweights, on the other side, there's consumer discretionary as well as IT services and metals that make it to Citi's underweights when it comes to their India strategy. So that largely is what their India strategy is this morning.
All right, lots to watch out for, in fact, on the back of brokerage notes. But on to snippets from a special segment, ET Now guest editor, where we caught up with the likes of Neeraj Choksi, Feroz Aziz, Vaishali Babu of ICCL, and the one and only DP Singh of SBI Mutual Fund to decode the trends in the mutual fund space. Now, is the sector poised to witness the rise of more simplified products? Let's go across and listen in.
Do you think in mutual fund industry will offer products which would be more simple, like the ETF way, or it could perhaps get more complex and more structured products could come, because now SEBI also has given in principle approval for more structured products to be launched?
So I continue to believe that ETF is a structure. The product is basically the underlying index, and index funds are also offered through the open-ended mutual funds. And for an individual investor, I think a retail investor, open-ended mutual fund is far simpler to participate into. SIP is far simpler. I mean, it's just for basically someone who is intending to do a trading day in day out. ETF makes a sense. So I don't know sometimes why so there is a lot of gung-ho about ETF. In the US, I think the ETFs are moving because they don't have a tax exempt structure, and that is why ETFs are very, very popular in the US. But having said that, I think simple products, SIP is a great way of participating. And when we are offering a large cap or flexi cap or multi cap type of funds through the SIP route, which probably where we have seen that there is a lot of under penetration in terms of the equity asset allocation at a household level, and a large component of money still continues to remain in debt and non-financial assets. I believe that these are the products which we have to offer. And while there will be all sorts of product today, also there are enough complex products, but I mean, what you are offering to which customer, that is the key. I think for a retail investor, the simpler products, the SIP way is the best way.
What is your understanding in which way the mutual fund industry would move? I mean, if I look at the parallel, which is the US economy, ETF is significantly large, but complex products are also, they also have a space. How do you see the product by manufacturers in India moving now?
Yeah, I think it has been my life mantra that be simple and be different, because that's really important. You know, in today's complex world, you know, we try to launch some very difficult products which are not really being apprehendable by the retail. We are here targeting the retail, and hence we need to be simple. And that's the differentiating factor that we bring in. Having said that, it is also important that some of, not really all, but some of the India's population, you know, they are as of now mature enough to handle some complicated products. And any market, if it has to cater to different needs, it needs to have a mix of a little structured products and simple products like SIP. Looking at India's texture or the people who are really getting attracted to this, I think a less of a complicated, but yes, it needs to be there, and more of a simple products that is going to really work for at least next 5 years. That is where I see it to be.
How do you see the mutual fund industry moving towards simplification, towards products which are low on commissions but easy to understand like an ETF, or complexity is something which would only increase going forward?
Before I answer that, just allow me 30 seconds to highlight that what DP sir said, both have space. If you look at SBI Bank is the largest distributor of mutual fund, and SBI AMC is the largest AMC in the country. Both are possible. It's not just sweet talk, but this is delivered. So point is, both can coexist, and that.
All right, well, that was some important commentary for you this morning. Moving on, then SBI Card and SBI will be in focus as Goldman Sachs has come up with a note as well. The brokerage firm has upgraded SBI Card to buy, and on the flip side has downgraded India's biggest PSU to sell. In fact, Gaurav is standing by with all of the key takeaways there. Gaurav?
Well, yes. First, let's talk about SBI, because Goldman Sachs has now downgraded the rating to sell and also cut the target price to 742 rupees. Now, what they believe is that there are multiple headwinds when it comes to ROA, and valuation derating is most likely for SBI. They believe that the profitability has peaked. We have already seen that the best cycle of credit cycle is behind us, and that might be the reason that we may see some pressure in the asset quality. And on back of all these reasons, now they are cutting down the EPS estimates almost by 3 to 9% over the next 2 years, because they are expecting higher provisions and lower net interest income in SBI. Other than that, for SBI cards, they have actually upgraded the rating to buy from previous rating of sell, and they have also hiked the target price to 913 rupees versus previously what it was at 652 rupees. What they believe is that the down cycle that we have seen in SBI card is nearing its bottom. They are expecting PPOP to improve from here on, and this will support the EPS visibility for SBI cards. We may also expect the credit cost normalizing in the next 2 to 3 quarters, which will be another leg of support for SBI cards. And on back of this, now they're expecting cost to income to improve almost by 430 basis points, and they also expect some pickup in the loan growth in FY26, and that is why they are upgrading the rating as well as the target price for SBI cards. So definitely watching out on both these counters on the back of the Goldman Sachs note that we have received today.
Okay, Gaurav, thank you so much for that. So SBI and SBI card will be in focus on the back of those notes, but let's move away from the markets. And a fire has broken out in Times Tower building in Lower Parel West this morning. 9 fire tenders have been rushed to the spot. In fact, this is very close to the ET Now studio. Firefighting operations are currently underway. However, no injuries have been reported so far. And Boeing's troubled Starliner spacecraft is set to attempt its long-awaited return to Earth today, undocking from the ISS without any astronauts on board. Remember, it was carrying Sunita Williams and Barry Butch Wilmore for what was meant to be just an 8-day mission, but now their stay will be getting extended because of propulsion issues on the Starliner.
All right, moving on to some more news and updates then. President Biden's son Hunter Biden pleaded guilty yesterday to tax charges in a surprise move just before jury selection was set to start in his federal criminal trial in LA. The case centered on Biden's failure to pay $1.4 million in taxes between 2016 and 2019. And on to some good news from the world of sports then. India has touched the 25 medal mark at the ongoing Paris Paralympics, As Kapil Parmar clinches the bronze in judo, the Indian contingent is hopeful of adding more to the record-breaking tally of medals as well. So that's an important update coming for you right there. Moving on then, the BJP is set to release the BJP manifesto for the upcoming Jammu and Kashmir Assembly elections. The BJP's manifesto is expected to focus on good governance as well as boosting tourism in Kashmir, and a key announcement on the rehabilitation of Kashmiri Pandits is also anticipated.
Okay, on that note, well, we're completely timed out on this edition of Market Cafe. Thank you so much for watching, but stay tuned to VT Now because the market takes all this action forward.